Hello traders and welcome to another video review. Today is Tuesday, November 2nd, 2021. Let's take a look at the Forex calendar. What do we have here? We got the RBA interest rate decision published 5:30 during the Tokyo session. What do we have? No change, 0.1% as expected, as before, nothing changed here. We got, of course, together with the interest rate decision, a monetary policy statement and a speech from the RBA governor, Philip Love. So that's the Australian news. What else? CPI from Switzerland increasing from 0% to 0.3, which is more than expected, 0.2%. But in the same time, the retail sales increased from 0.8% to 2.5%, which is better than 1.4% expected. Plenty of PMI manufacturing data today from across the Eurozone. Spain, Italy, France, Germany, and of course the Eurozone itself. Building permits scheduled for release at 2:30 from Canada. That's everything. And of course we got the data from the New Zealand deep in the night, 10 p.m. Reserve Bank of New Zealand Financial Stability Report will be issued, and then we got AAG, a construction index, then unemployment rate, which is expected to decrease from 4% to 3.9%. That's only for the third quarter, and then of course employment change participation rate and the other data for the payments for the employment sector. So it looks like we will have to take a look at the euro, Australian dollar, and of course the New Zealand dollar. So let's start with the Australian dollar. As you remember yesterday, I've been talking about a potential reversal here from the 100% of the Fibonacci projection, 7,537 pips. And as you can see, after the second attempt and a slight breakout, to be honest, the high was made at 7,556. We got one day of inside day, and then of course today there is some sort of a breakout. We might be going lower towards the last week lows of 7,455, but still there is the technical support present at the level of 7,415. So this is the old technical support that I was talking about before, and this is exactly the pattern that we are looking for. This is AB is equal to CD. So if you don't know, guys, this pattern, let me just point it out. I think I'll be able to draw it. This is what I mean. AB is equal to the C, and basically let's say this one D, almost to 100% without 19 pips. So that's the pattern, and as you can see, right now we are going lower on the Australian dollar due to the apparently, I think, the news that triggered the down move. New Zealand dollar ahead of the data from the Reserve Bank of New Zealand. What happened recently? We got a breakout. Some data here are quite unnecessary, because the most important thing is we broke up out of the channel. The technical support at 7,113 is now the key short-term technical support, but there is no follow through because market hit the overbought levels, like here, the extreme overbought conditions. We have bearish engulfing, then we have a consolidation, then again attempt to rally towards 7,250, the nearest technical resistance, again decline, and then nothing happening here. So possibly, just possibly, what do I see here is some sort of a trend line here and there, and we got a triangle. Can't see why not, because that's the continuation pattern, really. So what do we have here? Wave 1, wave 2, 1, 2, 3, 4, 5, right? Wave 3, A, B, C, D, E, wave 4 in a triangle, breakout to the upside. So it looks like there is one more wave missing towards the at least 7,500, 7,250. So green arrow towards this level, and then we will see how the situation will unfold. Of course, this scenario is valid as long as the level of 7,113 and especially 7,072 pips is not clearly violated, because if it is, then the chances for another slight lower towards 7,000 pips and 6,983 are very, very high. So that's the scenario for the New Zealand dollar. We are waiting for a breakout to the upside on this market. What is going on the euro dollar due to the PMI data? We've been talking about this situation on the US dollar mostly because of that last market behavior, very, very dynamic reversal towards 1.1525. Please remember, 50% of the Fibonacci retracement of the whole post-COVID move up is still ahead of us. 1.1497, basically 1.15 level. So that might be tested soon. But if this is the false breakout and this is the reversal bar, then it doesn't look good for bulls at all, as long as we are trading inside of this channel. That's the first thing. And the second thing, when the market eventually would have broken below 1.15 level or 1.1497, doesn't matter, that's 3 pips difference, then of course that might cause some sort of a panic selling on the euro dollar. So please keep an eye on this market. And very interesting situation on the Bitcoin. I would like you to take a look at this a little bit, because what is going on here on the Bitcoin on a daily time frame chart, as you can see, we got our Elliott wave, of course, Elliott wave count, but please notice the fact that we have a reversal bar here, right? This is the reversal bar. This is kind of a breakout bar above the level of 62,517, but no close above this level. Then we have inside bar, then we have a kind of an inside bar, but it's too low. Then we have a new low in yesterday, but of course no close around the lows. And then, as you can see, let me make it bigger, for today we have so far update, but as long as we trade below 62,517, bears are still under control of this market. So the situation is very, very simple. We need a strong breakout. We need strong leadership, and we need another big wave up like here or here. Okay, because if not, then the wave 4 will be more complex and time consuming in the nearest future. So wait for a breakout 62,517, then the highs from the last week 63,646, and then of course the previous high 64,768. All of these levels must be violated in order to continue wave 5 to the upside. Otherwise, wave 4 will be more complex than a simple A, B, C to the downside. It will be more complex. That means more time consuming, more whipsaws, more kind of consolidation, corrective trading between levels of technical support and resistance in a narrow zone. So that might be the scenario if there is no definitive breakout to the upside. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Take care and bye bye.